Ladies and gentlemen, welcome back to Data Dispatch. I hope you guys are having a great New Year's Day. We have an important video to really pay attention to because tomorrow is the first trading day of the new year. And what we just recently had was Dan Ives came out here and said a few hours ago that they believe that tech stocks will be up 25% in 2024 with a NASDAQ level of around 20,000. And the bullish case scenario right now is still significantly underestimating how quickly this AI monetization cycle is playing out among enterprises in the field. Now, great prediction here, especially for the bulls, and what we've been doing particularly is looking at some of the biggest AI stocks in the industry and what we've seen in 2023. We've really had a focus on Palantir Technologies, and we're really going to recap its trading patterns and what we could be identifying as key resistance points for Palantir to really give above the 20s, and how this is going to be playing out is going to only happen in a matter of time. But with full analysis, let's break it down and get into the video. If you're new to the channel or a returning viewer, thank you guys so much for watching. Hit that like button, subscribe for daily videos, and of course, I'm not a financial advisor. I'm just collecting all the data and dispatching it to you. Now, bringing up on the screen here, Palantir closed last year, interesting to say that now, at 1717. We're going to be identifying, and right now, tomorrow is going to be a very important trading session because right now, Palantir sits at a very critical level of support. Right here at this trend line is at that $17 level of support. Now, why I think this is really a critical level of support, in my opinion, is because the last time that we've traded below the 17s for Palantir was before the Q3 earnings were released. And if we quickly look at the Q3 earnings, remember they beat those expectations, coming in here with revenue at $558 million. Now, talking about where Palantir is right now, at that, between that Q2 and that Q3 earnings report, Palantir established this large gap right here, basically going from the 14s to the 17s and not having any consolidation between there. Palantir, however, in its trading past does like to trade, you can see these two trend lines right here, and consolidate between the 13s and the 16s. Now, if there's any big corrections among the market, Palantir could easily, I think, get back into the zone. I think that is entirely possible. However, if it doesn't, and if it continues to climb up here, its resistance point that it needs to test on the short term, if we bring this up here, is at the 18s and at the 20s, really for a psychological and a big key resistance point. However, Palantir was able to surpass that with the last quarter earnings, setting its most recent 52-week year-to-date high at 2185. The difference now is that there's a new year-to-date on the table. And where Palantir sits right now is especially interesting because there's not a ton of trading and consolidation between the 18s and the 20s. So Palantir needs to hold this incremental zone and build some foundational support levels, I believe, between the 17s and the 19s to be able to have these critical and these testing points at the 20s and being able to hold above those levels. Now, the questions are, what are going to be the key catalysts for Palantir that will allow the momentum and the buying pressure to help push it above the 20s? Now, one thing that we do need to look forward to is the next earnings, and that's going to be February 13th of next year. A bullish case that we already do have for Palantir is that its earnings per share revisions has already been bullish and has changed 9 times in the green direction in the last 90 days. And where we're in the last 90 days, where we're sitting at right now for the Wall Street analyst predictions is at 8 cents earnings per share. Now, this is great, especially talking about how much of a growth and profitability that we've seen in Palantir within the last year, is that Palantir has now been profitable for 4 consecutive quarters on a GAAP basis. Now, a lot of people already know this, but I think what's important is that Wall Street is looking for Palantir to post those earnings of 25 cents per share this year compared to an 18 cents per share loss a year ago on an adjusted basis right here. So forecasting this growth of 29 cents per share next year, we are expecting, and analysts are expecting, revenue to grow, Palantir to remain profitable, and also we're expecting them to be a leading competitor. How Palantir is continuing to be a leading competitor is with this new dive of the AIP bootcamp. And I think the potential for the AIP bootcamp. If you don't know what AIP is, this is a new artificial intelligence software that Palantir has really rolled out, and it has started being tapped in to the private clientele and commercial sector. If you're new to Palantir, or if you didn't know, Palantir has really relied on governmental contracts as a majority of its revenue generating. Now, with that being said, Palantir now has the AIP bootcamp that allows these potential clients to test Palantir for $0. It's a free trial, and this is a great business, basically, example to set in the industry, and also a great way to compete with other AI vendors that are starting to come to the table. We've seen this with Palantir's recent governmental contract renewal that was at a lower time period and at a lower value because other AI vendors are coming to the table. So if Palantir can continue to have a hedge against all the other AI stocks and AI companies that are trying to outcompete it, I think it will still continue to be a leading competitor in the industry. And the way that we can look at that, and specifically one of the big metrics that I like to particularly look at, is the cash flow in the balance sheet. Palantir right now has $3.28 billion in terms of its cash and equivalents and short-term investments. Compared to its total liabilities, only at $688 million. So it has a very high amount of cash on hand compared to very little debt that is on the table. Why this is bullish for Palantir, especially going here into next year, trying to maintain and trying to beat the bar that Wall Street keeps setting it, is that it has a lot of money to put into developing its future softwares, its AIP softwares, and also its concurrent softwares that it already has. Remember, Palantir has Foundry, Gotham, Apollo, many different softwares that can be tested within the bootcamp and allows Palantir to find the best software for these potential clients. So as Palantir continues to invest into its resources with a lot of money that it does have on hand, and also in improving its technology from a software perspective, this inherently and intrinsically allows Palantir to have a hedge on the AI race. And with that being said, allows Palantir to try to grow into its valuation. That is one of the biggest criticisms right now for Palantir, is its high valuation and also its decelerating revenue growth. And where this comes from and why people are uncertain and skeptical about this is because recently, or not too, in recent time, but not like yesterday, Palantir said that they were estimated to have about a 30% annual increase in revenue. What we've seen is a decrease down to about 16%. People are saying, hey, this is not growing at a pace that it needs to. However, I think Palantir is going to change here in the near future with their AIP bootcamp, tapping into, like I said, that commercial sector that it really hasn't seen highlighted in a lot of its earning reports in the past, because they've really been focused on just the governmental side of things. So with that being said, Palantir has a great opportunity here to grow into its valuation. And I think that a lot of investors are willing to pay a high price for Palantir for its premium price right now. Shows you the bullishness and the confidence that Wall Street and the retail investors have on Palantir for becoming successful. And one big metric that I've seen that I like about Palantir is that even though these earnings per share revisions keep continuing to increase in the bullish directions, they keep basically expect Palantir to hit these higher bars, to hit these higher milestones. Palantir has been able to beat those for the last multiple quarters. And with that fourth quarter of GAAP profitability, now you have maturity coming to the company because you have the possible inclusion of the S&P 500. That criteria is met. When they will be included in the S&P 500, that's only going to be a matter of time. It's going to be a question on, well, what stock is going to come out of the S&P 500. But Palantir is being able to be fit into the S&P. It'll be a great day when that happens. What we've typically seen with stocks that are included in the S&P is typically about a 5% increase in valuation. That's not a guarantee. That's just what has historically been seen because of the index funds and all of the ETFs that do track these indexes like the S&P 500. You do start to have diversification from the buying perspective coming into the stock. But other than that, it'll be interesting to see what happens with Palantir, breaking it down. Like I said, that $20 level of resistance point is going to be incredibly important for Palantir. And I think once we can see the momentum and the trading patterns start to consolidate between the 18s and the 20s, I think that testing of that $20 resistance point will be tested multiple times. And once it's able to break out and hold above that, then hey, Palantir could hit some new 52-week year-to-date heights that we have not seen before. I think 2024 is going to be a very great but interesting year. So make sure you guys stay tuned. If you made it to the end of the video, thank you guys so much for watching, and I'll catch you guys later.